Good morning, everybody. Welcome back to another live stream. Happy Monday to you. Not such a happy Monday for silver. I don't know if you guys have seen this. Down 7.5% this morning. Gold also down 2.8%. Pretty good little sell-off here in the precious metals overnight. We have a little bit of softness in the stock market as well. NASDAQ down 0.6%. S&P 500 down 0.36%. Russell's down 0.4%. Little bit of a comeback to normal here to an extent this week. However, it is still a shortened week due to the holidays, right? So we have New Year's Eve. So it is sort of a wonky week where we have Monday and then Tuesday, and then what is it? Wednesday? Yeah, Wednesday and Thursday. No stream, no markets, or markets will be partially closed or fully closed. And then on Friday, we are back to normal. So with that said, hope everyone had a nice holiday season. It's definitely, probably going to be a quiet week this week. However, you gotta say for a quiet week, that's a pretty big move in precious metals. I'm curious what you guys think. Is this, are we topping in gold and silver? Are we going to move lower? Actually, I saw something. This has got to be a terrible day for this individual. I saw a tweet that was going viral over the weekend. A pretty notable crypto bull, big crypto guy, sold all of his cryptos to buy silver, made a physical order for $300,000 worth of physical silver. Sold all his crypto, used all the proceeds to buy physical silver. I imagine that guy is having a tough morning. But I have to say, I don't know what silver and gold is going to do with certainty ever. Nobody does. But my goodness, man, was that a topping type of signal? When you have people who are like, forget crypto, I'm going all in precious metals because precious metals are up, please be careful. I think Chris Pulver has been doing a really good job on the show of curbing a little bit of the enthusiasm when it comes to precious metals. You guys have to remember, I am a precious metals bull. So is Chris. So are many logical traders and investors. But everything has corrections and sell-offs and nasty days. In fact, Chris made a really good point in our last conversation together. He was telling us basically that during some of the more sharp sell-offs in silver, the crashes can be on par with stock market crashes. Like, check this out. So in COVID, right? Look at this. During COVID, let's go from this peak here, September 19th. If you had bought around this area, silver dropped by 41%. That's nastier than what the stock market did, right? I mean, even this move is nastier than the stock market, right? That was a bigger drop. Now, commodities are just insane in general. There's a reason a lot of people love and hate precious metals, because when they move in your favor, it's amazing. When they move against you, it is rough, right? I mean, take a look at this. Like, if you had bought the highs here, your drawdown was, again, 41.5%. Even, when precious metals, nothing goes up straight forever. And so, again, I'm not a big fan of shorting silver. And I'm also not a big fan of longing silver at these levels. My big thing with precious metals is I love trading them on the long side. But when they go like parabolic like this, where they start to like lose reality levels of uptrend, you have to be careful with melt up charts, because melt up charts can also be melt down charts, right? You very well could have a very, let me show you something. Let's plot the 200-day moving average on here for a second. And the 200-day moving average is so popular on Wall Street because it's sort of like a long-term fair value, right? Fair value on this market or on any market, a lot of times people will use the 200-day moving average as a very simple barometer of what is a quote unquote fair value for an asset. So when you get very stretched above the 200-day moving average, like we are right now, oh my goodness, what some people will say, investors, value type investors will say, I buy if it comes down here. I don't buy up here, right? This is momentum. Momentum traders, which is, by the way, from a trading perspective, that's where I live. I like to trade momentum. But value people are going to say, no, silver's a buy at like 45 if it comes down there. Momentum traders are going to say it's a buy as long as it's going up. So what happens when you have this type of move? Uh-oh, we got problems. Momentum traders bail on it and value traders are not interested. That's where you can have V-type moves up or down, right? Does that make sense? Are we on the same page with that? If you are seeing silver truly come down here, and I mean, I think a really solid spot to watch is this $70 an ounce mark. If you fail to hold where we had that rejoicing up move and the exhaustion gap higher, if you fail to hold that area, I think that is quite bearish in the short run. As a momentum trader, you might say, well, Nick, okay, so if you're a momentum trader, where do you buy something like this? Well, even in momentum, I still like to have pullbacks, right? So I still want to wait for a constructive pullback. And I don't really have any great structural points to watch. I think maybe the 38.2% retracement, this $70 mark. But let's just say I buy silver there. Momentum trading also means that when momentum stops working, I am so gone so quick. So let's just say, for example, I were to take a long stab on silver. It's not an investment for me. I'm not long silver to the grave. Now, I do have some physical silver that's a little bit different, but I'm talking about a trade here. I'm not talking about investing. When I say, okay, maybe I'm going to take a stab here, I'm looking for that momentum to come back into this market real quick, right? I'm talking about, I want to see buyers send this thing back higher real quick. So would I take a huge trade on this? Not really, because again, it still feels like a melt up chart, and I think you very well could continue to come plummeting lower. But look, I mean, silver's down 8.8%. Gold is down 3.3, actually 3.12. In fact, coming back down to it, we got to talk about gold now. Let's just finish this topic on silver. So I actually like gold way more, just from a trading perspective. From an investing standpoint, personally, I like silver a little bit more. But I liked it a lot more a year ago. I bought some physical silver. I have it in some of my other portfolios. Long term, I like silver, but I like it less because the gold silver ratio has come down a little bit, or it's come down a little bit. So let's go XAU, XAG, right? So the value of gold relative to silver has actually come down. So for a while, I really preferred being long silver, right? Because silver, it was cheap relative to gold. It took 104 ounces at one point of silver to get 1 ounce of gold. Now it only takes 60. So at this point, to me, now gold looks like the better buy, personally. And the further this ratio drops, the more attractive I think gold actually is relative to silver. So that's my thoughts on it. Anyways, let's go take a look at gold here now. So I'm long gold. I have a long position on GLD. I'm definitely giving back a good bit of my profits today. You guys may remember, if you've been watching the channel closely, you know I've been up over 10K on this position. And so I've given back some gains on it. That's perfectly fine. Let me just explain my plan here for what I'm going to do. So as price comes down into this area, I am actually going to probably add to my gold position. Not a huge amount because I already have a good size trade on. But as you come into this area, if this thing continues to push lower, I do like gold to the long side. As you come into this 43.60 level, this may be an area where I add a little bit to the trade. And if that doesn't work, it will also be stopped out of with my existing position for a profit. So gold is stressing me out. It's stressing a lot of people out. I think gold and silver are causing some people some headaches this morning, or people some, you know, if you're short those metals, then you're probably loving life. But at the end of the day, whatever you do, please trade small. You'll be way better off if you accept that reality. The smaller you trade, the more likely you're going to survive this game. The bigger you trade, the more likely you're going to lose everything. It's just the unfortunate reality of the markets. They are brutal. And no matter what strategy you use, it will have a losing streak. And so if you're trading too big, it's just a matter of time, not a matter of if, but a matter of when will you blow up. If you trade small enough, you are way more likely to survive the trouble times. And sometimes what people do is they'll get into a new strategy and it goes well for a little while. And they're like, hey, the bad days are behind me. Only to find out they keep trading that strategy. Oh, that strategy also has drawdowns and periods of time where it stinks. You're not going to avoid that. Every system, every strategy, every market, everything in markets has a pro and it has a con. So small position size is the only logical thing to do. It is the only logical approach to be sustainable long-term. Small position size win in the end. Big position sizes lose in the end. You may have a big lucky trade, but if you keep placing big trades, you will give it all back. Because again, one bad losing streak. Ray Beast, I see your comments about Russell. Don't worry, I'll take a look at it in just a moment. So anyways, yes, gold, I do like as it pulls back into this 4360 level. Let me just finish on the precious metals here by taking a quick look at them on the Edge Finder. Silver and gold, both getting bullish readings. Platinum also. Copper is another one. Low key, I am keeping my eye on copper. Let me just pull that one up too. Down 4.4%. So let me just draw my fibs here. Maybe this 50% level looks attractive, but really I like the 618 even more. So in fact, I mean, that's the more obvious play. The more obvious play for me is if you were to get this 618% retracement to come into copper, I actually do like, excuse me, I do like copper on a pullback as well. So yeah, we'll see. Gold here, again, the story is as you come into this area, you've got a momentum chart to the upside. You got higher lows, you got higher highs. I'm comfortable taking a small long position here, personally, with my own trading strategy. But again, define it. What are you going to do if you're wrong with that idea? And so for me, I like gold at this area. 4360 sounds high, but I'm a buy high, sell higher type of trader, not necessarily investor. When I invest, it's very different. But as a trader, I'm a buy high, sell higher type of trader. So I think as you come down to this area, right, we are still buying high. If you're taking longs on gold, you're still buying high at these levels. But my thought process is, okay, higher highs should be coming for gold. And if they're not, right, I need to stop out of the position prompt. Right? That is what momentum trading is. Momentum trading is saying, okay, it's moving up. I'm long. And if I'm wrong, I'm gone. Right? So that's it. I do like gold to the upside. I'm going to keep an eye on that one. Let's take a look at Russell and indices in general. We've got S&P 500 pulling back a little bit, down 0.4. NASDAQ's down 0.6. Dow Jones down 0.25. And the Russell is down 0.44. I do like the Russell. If it comes down here, I may join you on that trade. But I really like the 38.2 to 50% retracement zone as a possible long scenario. If you're trading on a lower time frame, maybe you have a level that you like a little bit more on like the 4 hour, the 1 hour, etc. But for me, that's where I see a better risk reward setup would be for me if you got this kind of pullback. I like that trade quite a bit. In fact, that's probably, it's not quite setting up. I think gold is probably the most pressing setup for me right now. But this kind of move is probably one of my favorite setups in the market at this time. Pullback on the Russell, 24.75, somewhere around that region. I like that for a possible long trade. We do also have edge finder confirmation. Russell, NASDAQ, Dow, they're all getting strong readings. So, for now, momentum still looks decent for some of the indices. SPX also. At some point, momentum will break. It'll roll over bigger time. But when I talk about these things, I'm not talking about investing, right? And I need to clarify that because investing is different. I'm not talking about, hey, I'm buying the NASDAQ and S&P 500 for the long term forever right here, right? Why not? Well, because I think they're expensive. But expensive from a trading perspective is the type of environment I actually like to buy. It sounds counterintuitive, but an expensive market is oftentimes expensive because it has a lot of momentum, right? It's a weird, you have to rewire your brain. If you're a trend follower, if you're a momentum trader, higher highs, or the idea is buy high, sell higher, or sell low, buy back lower. Again, I think when we're looking at the indices here, NASDAQ, I think, is not as attractive of a chart, to be completely honest. I think that the S&P looks good. I think the Dow Jones looks very good. And I like the Russell. Take a look at some moving averages here. Excuse me. Taking a look at the moving averages here, you've got everything looking pretty good here. The 20, the 50, 100, and the 200-day moving average prices holding up steady. These moving averages are aligned. As you pull back into this area, I do like this, that 100-day and 50-day moving average as possible areas of support. Lines up nicely with support looking left. So I do still like this trade. Again, it is a trade though. So if it's wrong, I'm out of there. So those are some setups that I really like right now. And we'll see if I get a chance to add to this gold position. Again, I already have a long position on gold. If gold continues to pull back here a little bit further today, I may add a small amount of long exposure to my existing position that I put on November 20th. So we'll see. Everyone talking about gold. Yeah, gold is it is a popular topic right now. That is for sure. I would say silver is maybe just as popular, down 8.45% on the day. Silver had a blow off top looking kind of move over the weekend, right? You gapped up and at one point traded up to $84 an ounce, a 6% move higher, only to then completely erase those gains. Guys, it's down 14% from that all-time high. That is a crazy, crazy move for one day. Let's take a look at some stuff here really quick. We'll take a look at our investor sentiment survey. I thought this was kind of interesting. Crowd sentiment got a little bit more pessimistic. You had more bears come into the picture, 34.8%. Bulls slightly outpacing them, but what this AAII investor sentiment survey shows us is it shows us a weekly poll that shows what people are feeling, what investors are saying about how they feel about the stock market over the next 6 months. Do they feel bullish, neutral, or bearish? And for much of this year, interestingly, crowd sentiment has actually been quite bearish. If we scroll back the calendar here, let's just go from like February of this year. Notice how bearish the crowd sentiment was in the stock market sell-off that we saw in April, right? Crowd sentiment was very, very bearish at the bottom of the market. And so we've seen a little bit of a recovery here. Take a look at the blue bars, right? The blue bars are bullish sentiment. It has recovered, but I wouldn't even say that now, even at the stock market all-time highs or very close to it, you still don't have overwhelming euphoria in terms of the reaction here from investor sentiment. I think that's kind of interesting. So when you have crowd sentiment there's still pessimism in the room. To me, that signals you could still have the stock market squeeze higher just to kind of spite the bears, right? There's still a crowd of people who are very pessimistic on the market. And there's reasons to be, right? There's for example, If we take a look at some economic data really quick, let's actually, and I think that's one of the bigger concerns people have about the market is actually some of the economic reads that we've been getting. So for example, the jobs market has been seriously pretty troubling in the sense that you've had, for example, ADP statistics come in worse than expected. The jobs report, the non-farm payroll, it surprised to the upside by 13,000 jobs, but we're still only talking about 64,000 jobs added, guys. That's a very small number. You're not seeing massive hiring. Granted, you're also not seeing massive layoffs, but the concern is that layoffs can happen quick. They can start rolling in and compounding very quickly. So very low hiring is also a little bit of a concern. It's hard to get, businesses to just go out and massively hire, but they could very quickly decide to lay off. You see what I'm saying? So what you have here is you have JOLTS job openings. We've talked about this many times on the channel. Job openings in the United States have not been very attractive for a while. They've been trending down for multiple years, right? You've had a trend down in job openings in the United States for some time. We can also see unemployment rate here in the United States is trending up. So there is reason to be concerned about the labor market. I think that's perfectly reasonable. The next question that you have to ask, though, is can the Fed save the day again, right? They've saved the day several times in the course of the last 20 years. If they are to turn on the money printer and cut the rates, does that work again? And it's a tough thing to make a prediction about, but I generally think that for now, it probably can. They probably can paper over and continue to print money. Now, there are very real consequences that are not just in the stock market. Like, for example, ask yourselves, why are gold and silver up so much? Like, really, why is gold up so much? It's gold versus the US dollar. Put it another way, DXY versus gold, purchasing power is getting destroyed. That's why. So when the Fed papers over and saves the stock market, please understand, when I say paper over, what I'm talking about is when they turn the money printer on, they do a bunch of QE, there is still effects to that. It comes in the form of our grocery bills going up, our home prices becoming more unaffordable, right? So there are real world consequences, even if it means saving the stock market. So, something to think about. There's no free lunch in the system. Anyways, I think that's part of the reason why gold and silver have done so phenomenal this year has been people are anticipating, the Fed's they're going to start printing again, and other central banks are going to do the same. And we're going to see a lot of fiat currency destruction to save the stock market again, and to save not necessarily just the stock market, but the economy itself, right? To save, people get people hiring again, and, make borrowing costs lower. The question then becomes with, like, for example, the Trump administration, they're on paper, the idea is to lower interest rates to completely stimulate the economy to a point where the economy grows so strongly that it actually outpaces national debt, right? So national debt, the idea is that if the economy can grow like this and the national debt grows like this, right? The theory is that there is a gain here to be made where the economy can outpace, we can pay back our debt with new issued currency at lower valuations. The challenge, though, is that it comes with serious risks in the sense that what if you don't get that growth and instead you just get way more national debt and subpar growth, right? That's the difficulty. Nick for Fed chair? Absolutely not. I'm not knowledgeable enough, and also knowledgeable enough to know I don't want that role. But yeah, so that's something to think about is, okay, how does that impact the system? The Trump administration has big plans to spend a ton of money. whether it grows the economy massively or not 5 years down the line, the stock market likes it anyways. Why? If the administration hands out a bunch of tariff checks, if they cut borrowing costs dramatically on people's credit card bills and auto bills and all those things through the short end of the curve, right, by cutting interest rates at the Fed target rate, what does that do to the stock market? It pumps money into corporations because it gives money out to the people real quick and they go spend it. And where does that money go? To corporations. So, and the stock market's like, well, who cares whether or not the economy starts to meaningfully go up or not? 3, 6, 12 months out, that's a lot of spending coming into the stock market. So I actually think that the Trump administration, whether you like, dislike, agree, disagree, I think that their policies are very bullish for the stock market because it equates to the ultimate thing that the stock market really loves, which is stimulus through money printing, right? So something to think about. The VIX is up 10% here today. You've got VIX, even though it's up 10%, VIX is, has been beaten down here recently. You've got, at one point we traded almost down to 13, which is really insane. 13.5 on the VIX. Jumps back up to 15. So we'll see if we get a little bit more volatility here on that side. Dollar index continues to trend lower on a bigger picture here. I think this makes sense. I think the labor market is showing you signs that, the U.S. economy is probably going to see further rate cuts to stimulate, to try and save the day on the jobs market. However, the bigger question that you kind of have to ask is, are they too late? Are they cutting interest rates too late? That's the question. And if you think that they're cutting interest rates too late, that's where they can start cutting interest rates very quickly to try and save the day. And I was actually doing a study. Historically speaking, there is a very slight downward bias 6 to 12 months out after the Fed cuts interest rates. Or actually, I think it's more like, 1 month out to like 3 months out, somewhere in that range, you actually have a bearish stock market. And the reason is, why do they typically cut interest rates? Why does the Fed usually cut interest rates? To help the economy. A hurting economy can lead to hurting corporate earnings. So you're playing with fire here, begging for rate cuts. Generally speaking, what that tells you about the statistics is that the Fed tends to be late to the process of cutting interest rates. And in 2008, they cut interest rates really fast. Why did they do that? In 2008, the Fed cut interest rates very quickly to try and save the economy. The problem is, why did they cut interest rates really fast? To save the economy. But the economy had already slipped, right? You already had massive problems, massive issues, and rate cuts are really not very effective if you are behind the curve. Now, there's also times in U.S. history where the Fed cut interest rates slowly, and they did so in a meaningful advance of economic decline, like in the 90s, the late 90s. The Fed cut interest rates really slowly, and it led to an absolute stock market melt up because the economy held together, didn't crash, and the Fed cut rates very slowly. So when the Fed cuts rates quickly, that is a we missed it. We missed the curve, right? We missed the economy falling out of the sky. And when the Fed cuts slowly, they feel that they can take their time. Stock market tends to love it. So far, oh my gosh, guys, silver's down 9.3%. Did I just see that? My goodness. So far, the stock market has really liked the Fed rate cut process because it's been really slow. So we'll see how that all plays out. Just a quick check here before I pass over the show to Marco from our side of things. He'll be taking over. NASDAQ down 6.7%. Russell's down 0.5%. You have silver here. My goodness, man. And gold also coming into a level. I may choose to add a little bit to my trade. I'm going to probably go take a closer look at that and decide if I would like to do that. If I take that trade, I'll update it inside of the VIP group. By the way, come join us inside of the Discord. If you're not in there and you want to trade with me, Marco, and the rest of the team here, don't miss out. Come join us inside of the VIP room. It's currently supersized discount, 40% off. If you have some interest in doing that, if you would like to sign up for a VIP membership, or if you'd like to get access to the Edge Finder during our 40% off holiday discount, we'll drop a link here in the chat right now to where you can speak directly to a member of our support staff about getting set up with a membership inside of the group or access to the Edge Finder. It's on super sale right now. Do not miss your chance. If you've been thinking about getting it, it's the lowest price that we do all year long. We extended our Black Friday sale out to the end of the year for people who needed some more time. So that is coming to a close. So if you're interested, come trade with us. I'm going to go take a look at gold here. And if I take any position, if you're already a member, keep your eye out on there. I'm going to probably take a small additional trade and add it to my gold position just after I hop off here. Guys, up next, you've got Marco. Don't go anywhere. We'll be right back. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So quite a lot of activity today. Gold is down minus 3.4%. My NZD/USD position is has pulled back a bit. Aussie dollar still going strong. SPX pulling back a bit. NASDAQ pulling back as well. And then you have silver, which is in a massive, massive correction right now. So this is exactly what I was talking about in the last couple of videos, last couple of streams, that silver has gone parabolic. It looks like Bitcoin in 2018. It looks crazy, looks overextended. So the pullback will be aggressive and rapid. So that's what you can see here. I personally am not looking to get in. I'm not the one to be catching the falling knife. If you do some research, if you do some backtesting, you would notice that usually when silver makes more than 100% in 1 year, the next year is break even or negative. So just look at this. It has gone parabolic. For this year, we are still up, let's see, 148%. So I do believe we will definitely close the year above 100%. Making the next year break even or maybe even a bit negative. So my kind of forecast is that this is going to happen. And then we're going to go up, let's say, later in the year. Maybe we'll finish kind of positive or break even, but we're going to experience most likely, again, this is not a guarantee, but most likely we will experience a big correction lower. And this is pretty funny that we are getting so much volatility now that we have the holidays, Christmas, New Year's. So that's a interesting coincidence. But that's how the markets work. And you never know when to take a holiday. You never know when to take some time off, because it just could be the day that is the most volatile, has the most activity. So continuing with the forecast, or kind of with the recap of the movements. One more interesting thing that you guys need to know about is this news right here. So Japanese finance minister, just a sec. Japanese finance minister Katayama, we have a free hand to take bold action on the yen. That happened on the 22nd of December. So that was last week on Monday. Okay. Very, very important to note that, because that means they're going to do an intervention pretty soon, or they are preparing for an intervention. So if you're trading the yen, if you're looking at the yen pairs, let's focus on USD JPY. What is the intervention level? Intervention level is 158 to 162. Okay, that's the level. So in that zone, an intervention is very likely, especially now that we are on red alert from this news right here. So this is definitely red alert stuff. If price climbs a bit higher into that area, you can most likely expect they're going to do something. They're going to do some sort of an intervention, selling the dollar, buying the yen, because they don't like the current exchange rate. They don't believe that the current exchange rate fits the narrative, fits the fundamentals. Okay. If I was long on UJ, or if I was long on any of the JPY pairs, and if UJ goes above 158, sorry, I'm a bit sick, so I keep coughing all the time, but we're gonna get through it. If we go above 158, you can see the yen gain value across the map, not just on USD JPY, but across the map. So monitor this chart. I would be taking my profits if we go back above these highs. I have a small sort of experimental sell limit above 158. This is not a signal in the A1 Discord. This is just an experimental position with small risk, and it looks like this basically. So I have the sell limit. Let me see if I have it on here. Do I have it? Yeah, that's it. So we can delete this. This is my sell limit that I have. Just above the highs, stop loss 237 pips, aiming for the bottom of the range. A quick 1.7 reward to risk. Again, experimental position, not a signal. I'm placing very, very small risk on this particular trade, and I just want to see what happens, because I think it's pretty likely we do get an intervention at those levels, and pretty interesting to see how it develops. Other than that, I've been looking at gold. I know Nick just mentioned that he will most likely take another buy entry right there. We had a pretty clean break and retest, so let me remove this alert. And let's remove it from here. Okay. Pretty clean break and retest. We just retested the previous all-time high. Soon we will hit the 20 MA. I think this is a pretty good area to consider a buy setup. I'm not gonna go in just yet. I'm waiting for a bit of a rejection. Again, I don't want to catch falling knives. I don't want to catch massive selling pressure. But if we have some sort of a slowdown, rejection around the 20 MA, I may try to take a stab at it. I do love gold very much. I think gold is a much better play than silver going into 2026. I'm expecting silver to have bad performance in 26, and I'm expecting gold to do pretty well. If you look at the Edge Finder, let's take a look. Gold. Bullish reading. What about silver? Bullish as well. So why do I prefer gold against silver? There's one more reason. That is basically because silver is an industry metal, okay? So silver is heavily used for production and by manufacturers. It's used in many different things. So I think 40% of the demand for silver comes from an industry-related company. But most of the demand for gold comes from investment purposes, like golden bars. There's jewelry, of course, but there's a lot of investment demand for gold. So essentially, if most of the silver's demand is for manufacturing, and if these producers cannot afford silver at these prices, then the demand is going to go down. Okay, so silver gets too expensive. Manufacturers cannot afford silver. They stop buying silver. Demand goes down, and they make the bulk of the demand. While gold is a much better investment vehicle because there's always going to be people willing to invest, always going to be people willing to buy gold bars. And again, most of the demand is actually by investors, banks, blah, blah, blah. And also the price action looks a bit more stable. So the price action looks a bit slower, if I'm being honest. Doesn't look as crazy as silver, hasn't yet gone crazy parabolic, as you can see on silver. So I like the gold story. I think this is still pretty healthy to get in. I'm expecting high inflation in 2026. You have elevated inflation already. So if you look at the CPI in the US, inflation is elevated. It's around 3%. Yes, the latest print was 2.7%, but that's not a reliable print. I would ignore the last print. Because we had the US government shutdown, BLS has not done the detailed work needed to collect enough data. They basically manufactured this last print and they made it really low. So I don't think inflation is coming lower. I think this last number should be ignored. The markets, the markets have mostly ignored this number. There hasn't been a big move in the markets when this CPI number came out. So I would wait for the print in January and February. But elevated inflation, rate cuts are coming. So Fed Watch Tool. Rate cuts are coming in 2026. 2 rate cuts of 25 basis points are priced in. Trump's big beautiful bill, lots of spending, lots of printing. It's definitely gonna be inflationary. And what is the best way to protect against inflation? What is the best way that the big investors know how to protect against inflation? It is to buy gold. So I just love the gold story. I definitely want to get in, but I don't want to catch a falling knife. And right now, the price does seem to be in a falling knife scenario with the big red candle, with the massive red candle, okay? So just to update you on my 2 positions, NZD USD, I'm still in this position running in profit. Started to pull back. I'm looking to trail my stop loss. I still like this play. I'm going to keep holding it in January because the big banks are buying the New Zealand dollar. The big banks are also buying the Australian dollar. So if we can create a swing low like this, I will put my stop loss below that swing low and just trail the position. Aussie USD running even better. So Aussie USD looks pretty healthy, looks pretty strong. Game plan is to also look for a swing low and then to move my stop loss, to trail my stop loss below that swing low, and then hopefully the price does continue trending higher. So that is what I'm looking for on my 2 positions, but pretty happy with the profit so far. And again, you have the document that I showed you. I believe I showed it to you in the last live stream or in the one before that. I have the outlook for 2026 by the 12 biggest banks. So Barclays, JP Morgan, Citibank, and others. Most of them are bullish on the Aussie. Most of them are bullish on the New Zealand dollar. They usually execute these positions in January. So that's why I think by the 15th of January, Aussie and the New Zealand dollar should definitely appreciate. That's when they usually execute these positions that they sort of like the most for the upcoming year. They call it sort of trades of the year, right? That's the name. Okay? That's the biggest edge behind it as well. And also, I think if we jump onto the Edge Finder, let's see the economies, the heat maps. So Aussie, mostly bullish. So Aussie looks pretty good. Again, definitely reflected in the price action. Looks amazing. New Zealand is mixed. On the short term, a bit mixed. But what I do love about the New Zealand is that the central bank of New Zealand, the RBNZ, they flipped from being dovish to being hawkish. They did it right here. So that's the best. That is the best sort of indicator of a flip in the trend. That is the best indicator that you're getting in at the beginning of the trend, when the central bank flips from being dovish to being hawkish. Dovish is bearish, hawkish is bullish for the currency. Now let's mention the sponsor of today's video, which is DNA Funded. So if you guys are looking to get funded, expand your trading capital, it is one of the biggest reason why retail traders fail. So most retail traders have maybe $1,000, $3,000, or let's say even $10,000 in their trading account, while making 2, 3, 4% per month on that sort of an amount is negligible. You're not going to feel it. And it's probably going to make you risk a lot to have steady, let's say, monetary gains per month. Well, with prop firms, you have a great opportunity to expand your trading capital. So this is my personal 50K two-phase funded account on DNA. Current equity is around 4,800, so I'm in minus $2,000 drawdown, but I'm trying to climb out of it. The best thing about it is with our discount code A1Live, so A1 Live, you can get 25% off any challenge. Okay, so A1 Live, 25% off any DNA funded challenge. I would say a really tough thing in the prop firm space is finding a reliable prop firm, because 98% of them are here for the short term. They're going to scam you, take your money, disappear after 3 to 4 months. DNA is one of them that's going to stay. They're being ran by professionals in the background. There's a big broker behind this company, and they're using TradeLocker for execution, which is, in my opinion, the best software for execution. So make sure to take advantage of our discount code A1 Live, 25% off. And now let's continue with the regularly scheduled program. Let's take a look at the comments. Time for the comments. Okay, let's see. Silver, is it a buy at this level? I would say absolutely not. I would not touch silver. I think silver, because it had so much momentum going higher, it can now have so much strength to drop. So with these huge uptrends, the pullbacks, the downtrends are massive. I'm talking 15, 20, 25% retrace, maybe even more. So it can really be crazy. What is the rumor about silver that happened over the weekend? I haven't heard of any rumors. I just know that this was pure speculation. This was a crazy uptrend. And this was some very inexperienced people buying silver when they should have been staying on the sidelines. So when you have a lot of inexperienced people come in the markets, buy a bunch of silver, usually you get a parabolic uptrend and then a crash. Why is the dollar crashing? Is the dollar crashing? I wouldn't say it's crashing. It's just down on the day. For it to be crashing, I would need to see, let's say, a candle as big as this one. That would be a crash. You can say this was a bit of a crash, or this move right here, or this move. So this daily candle, pretty small, nothing to be concerned about. Bolot, welcome to the stream. Why are they taking profits before the year's end, though? Well, possibly could be some profit taking as well. On gold, maybe some profit taking happening. On the SPX, on the NASDAQ, maybe some big institutions, big hedge funds, big banks closing their positions because it's the end of the year. That could be the case. But you usually get a Santa rally. I mean, the seasonality pattern with the US stock market is a Santa rally at the end of December, where the stock market steadily climbs higher. So you don't really get a lot of profit taking, or you didn't get a lot of profit taking in the past. One thing that's cool with the Edge Finder, if you jump onto the seasonality monthly, See? So you can see the Santa rally in the seasonality, right? So that's the Santa rally, or also the Nasdaq, Santa rally as well, November and December, and then kind of at the end of December, you get a push higher, okay? But on silver, I would say it's not profit taking. It is just a massive battle between speculators and smart money. Smart money gets out at the top. Speculators, they got in here. So the speculators got in here. The smart money gets out here. Okay. Joshua, Big Marco, how are you feeling today? I'm doing pretty well. Hope you're good as well. Welcome to the stream. Yes, the dollar is not crashing. Guys, be careful on the silver. The order book is so thin. The prices are skipping. It's illiquid. Well, possibly. The thing with silver is the supply is dropping dramatically while the demand keeps growing. Well, yeah, but these producers, these manufacturers, silver is an industry metal. It's not like gold. So these manufacturers cannot afford to pay these crazy silver prices and cannot afford to follow this uptrend. Look what happened in just 3 months, price almost doubled. Their expenses almost doubled. So that cannot go on for a long time. The prices will need to stabilize at a more fair level, let's say at a lower level where the manufacturers can actually afford to continue producing and selling their merchandise. Silver going to 100. Well, we were pretty close. Okay, we were not that close. But I would say if the daily chart looks like this, especially with the last candle, I mean, look at this candle on the daily chart. If the daily chart looks like this, the party is pretty much over because it's starting to look absolutely crazy. This is just from my experience from the bubbles I have seen in the past, especially because of Bitcoin. I've saw Bitcoin crash, I think 3 times already with the massive dumps, and they all look exactly like this on the daily chart. The massive silver drop if large banks didn't switch from ETF-based silver to physical. I don't think it's profit-taking. Wouldn't make sense to close out right before the year's end. Trump says very close to ending Ukraine war, had something to do with it too. On silver, I think it would definitely have a reaction on gold, not on silver. Silver does not really react to the risk-on, risk-off environment as much as gold does. Gold is the #1 investment asset. I would just isolate silver at this moment, and I would say it's too much speculation going on, and the crash was imminent. Yeah, I don't think the Russia-Ukraine war is going to end. I don't see any clear progress. It's just they're still in talks with each other, so nothing is clearly progressing. Please go through the currencies. Okay, sure. We can do the currencies. It was definitely not speculation. Retail cannot move the market that violently. Silver move was definitely big players. I disagree. The big players, the big money, maybe some of them, but the big players, the big money, they know better. They are experienced. They don't have a bunch of money for no reason. So you could make the same case for Bitcoin. Like, we know that there was speculation in Bitcoin during the huge uptrends, let's say in 2021. We know that this was mostly speculators and that the smart money probably started exiting here. Okay. Speculators, they do have some power. Not as much as we think, but they do have some power, especially at the market tops, when a bunch of them just go in on the buy button. There's also the difference between the paper value of silver versus what is being sold for on the Shanghai Metal Exchange, which is much higher. That is interesting. I haven't done any research on that. Copper is next. Let's take a look at copper. Let's see, copper. Copper actually down on the day. Went back to these highs, which is interesting to see, but then a big rejection happened. Copper, I wouldn't touch with a stick. I think it just looks really troubling. I would rather go in silver. Copper heavily impacted by geopolitics. Trump made some crazy announcement, and then we had this massive drop. The chart, I can't really read it. It's a tough chart to read, so I'm completely staying away from copper. Gold, on the other hand, right now seems pretty interesting. Seems pretty good for buy setups, in my opinion. There are fundamental economic and industrial reasons why silver is moving up. This is beyond speculation, and the longer-term move is likely still higher. I disagree, so we can agree to disagree. My research states that if silver makes more than 100% in 1 year, the next year is negative or break even. This looks crazy. I saw some experts on the topic. They said this is mostly fueled by erratic buying, by speculation. So I'm going to go with my opinion on this. But we shall see. Maybe you will be correct. Retail cannot move the markets $10 overnight. Retails just don't have the volume dollar. Well, maybe, but do you think institutions would be crazy to buy, to produce a 10% move up and then to drop the markets by another 11%? Then the institutions have become speculators. But the smart players, they're not just crazy buying one day and selling the other. Usually that's not what they do. They're a bit smarter than that. Remember that the Trump tariff crash was mainly caused by retail traders being scared. That is correct. But also big money was scared as well. The big hedge funds, the big institutions, they were scared as well. They were selling. So this was definitely influenced by speculators, but big money was in this as well. Big money got scared, and the big money managers, they need to exit positions if they start producing massive drawdowns. So if the S&P drops more than 10 to 15%, they start closing their positions. It's just one of their rules. They need to do it. Okay, so the smart money was in this. They actually did sell. Okay, let's see. So let's quickly run through some currencies, and then that's going to be the end of my segment. So as far as the dollar goes, I'm bearish. I'm bearish on the USD, but I don't think we're going to see 95. So I don't think it's going to be a drastic move lower. I don't think it's going to be a crash lower. But if we can grind it out a bit lower with the rate cuts that are coming, I can see that. On the yen, the situation is tough. The BOJ, they are dovish. They weren't very explicit about specific higher rates, so they didn't want to commit to higher interest rates in 2026. But also, right now, you had Finance Minister Katayama saying we have a free hand to take bold action on the yen. That's troublesome. So you're getting a bit of a mixed signal. What my plan is on the yen, I'm waiting to see what UJ will do. If UJ goes above 158, I'm going to wait for that intervention. After the intervention passes, I'll start to be dovish on the yen, because overall, the BOJ, the Bank of Japan, they are dovish. So the yen should, in theory, lose value over time. It should lose value in 2026. So I'm waiting to see what happens with the intervention. Once that passes, once the narrative passes, I'll probably look to sell the yen. I'm also looking at the CAD. So I think the CAD can gain some value in 2026. So I'm considering some short setups on USD CAD, because CAD is starting to climb out of a rut, you can say. If we just quickly, this is the last thing for today. If we look at the GDP for the CAD, the last print was negative. That's not the best. So my story isn't that strong. Let's take a look at the CPI. It's okay. The inflation is all right. Seems to be under control. Unemployment rate is one of the things that was a big problem in Canada. Falling. So the unemployment is falling, which is good. That's bullish. But the GDP is still struggling. So I didn't want to see this negative print. That's too bad. That's about it from me. Thank you very much for watching. My top asset for today is gold. Considering buy setups, I think it looks good to buy. Gonna wait for a bit of a rejection. Good luck in the markets. I will see you tomorrow, because I'll be streaming tomorrow as well. And yeah, that's about it. See you. Goodbye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, ho, ho.